Mike Tedeschi, Wealth Management Advisor, Perspective Wealth Planning, with this week's market breakdown video. We're going to take a look at the four major U.S. indexes. We're also going to jump in, take a look at the U.S. dollar as well as commodities. We're going to pay special attention to the emerging markets because that's been the big story this week. Now this week we started off pretty weak. I'm going to show you the Nasdaq first. You can see that big red candle. Sharp sell-off right at the beginning of the week, but we bounced back up, and the next day followed through here to the upside as a lot of the larger companies reported earnings. Earnings look good so far. Markets back up near those all-time highs. We take a look in at the Russell. Russell's still chopping around in this range that it's been in for the last 8 months at this point in time. So we're just going to sit back and continue to pay attention to what's going on in the Russell. A break above or a break below is going to give us our next clue. But right now, this is not an area of the market we really want to mess around with, as we are really trapped right there inside that zone with no appreciation for the year so far. We take a look at the Dow. Dow is making a new all-time high once again today. Nice strong chart breaking out of that range to the upside, looking for that follow through here to the upside. S&P 500 also nearing that all-time high zone, looking for that to break out and continue to follow through to the upside. Now when we jump in right here, we take a look now at the U.S. dollar. The U.S. dollar's run into some weakness. Now we talked about this in depth, and the thing I really always want to focus on is what kind of trend are we in? A downtrend is a series of lower highs. The only way that this could have been negated was if we took this zone out, because then we would have a higher high. We came right up into that, and it has rolled over sharply. We haven't made a lower low since the beginning of the year, so really the way I'm looking at the U.S. dollar at this point in time is over 93.5. I would be interested in on the long side. Underneath 89.5, I'd be interested on the downside, but we are just kind of trading in that sideways range in the context of a downtrend, right? Because we're coming from above, from the 103 all the way down this way. So there is a chance that we resolve lower, but again, our goal is not to guess which direction things are going. Our goal is to follow the trends. And the trend at this point in time inside the U.S. dollar, it's still a mess. We don't really have a clear one. Context, a larger picture looks like it's in a downtrend, but again, if we back this thing up and look at it on a monthly chart, we're right at that major long-term multi-decade support. So again, as I've said a lot in these videos, what happens in this market, in the U.S. dollar market, is going to have a huge impact. But this is a slow-moving market and can take a long time for this to play out. So we'll keep watching it, but at the moment, not a whole lot to be said about that chart. Next, I would like to jump in and take a look at gold. Gold is having a nice, strong bounce here, and I want to zoom in. We put in a higher low at 1760 versus the low back at 1675, right? We held the breakout at that about 1800 zone, bouncing back up. If we look at this on a short time frame, we need this back over 1835 for a move back up towards 1900. The big picture is, of course, we've got to clear and hold over that 1900. Gold hasn't really gone anywhere for quite some time. Again, sideways range after an incredible move to the upside. We take a look at sister silver, right? Didn't make a lower low. All right, we talked about this. This did not look good here, that breakdown last week, but we needed to take out that 23 zone, and we didn't. We felt that we've started to bounce. 26 is the area we need to recapture. If we recapture that zone, we push back up towards that 28. We still have higher lows put in and kind of have that flat top. So this is an ascending triangle that's been in play for almost a year with no appreciation in the price of silver. So we're really watching this to see how this resolves. All right, not a lot of change really to talk about here. We take a look in at platinum, holding that important 1050 zone. We take a look at palladium, holding over that 2500 zone. All right, we come in and now we take a look in at copper. Copper held that 420. It's back over that 450. That was that all-time high area going back. I'm pulling this back to a monthly chart back to 2011. So above that, that looks pretty good. Obviously a solid looking chart holding up, closing this month, which ends in 2 days here over that 450 would be, pretty bullish inside the copper market. We take a look at oil. Oil hit that target of 75, 77 zone, fell back to 65, which was the support. That's the area we're trading in. Above it, very bullish in my opinion. It's trapped inside this range, not a lot to do. It's had an incredible run. A sideways action out of oil would make a lot of sense here to digest that moves that we've had over the last year, which have been incredible. This is a period of time and a spot where it makes sense for us to kind of take a pause. Watching it very closely, a break above, again, very bullish, but it wouldn't surprise me if we traded sideways here for quite some time. Now, when we talk about oil, we also like to take a look also in at the emerging markets. This has been a kind of an incredible move here over the last few sessions. And what I want to do is I actually want to put the 200-day moving average in on this chart for you guys to see. All right. That is this purple moving average. We traded underneath the 200-day moving average on the emerging market for the first time since last June. All right. Major area of support, that 1276, broke to the downside earlier this week on China and potential crackdown inside the tech space. But look what happened. It did not break. I'm going to back this chart up even further for you guys to see. This is the support zone, right? It's not just a number, it is a zone. And I really saw support back down to about 1220, starting at about 1270. And what we can see, a lot of people earlier this week kind of capitulated in the emerging markets because it was below the 200-day moving average and it broke below kind of that area of support from March and from April. And what I was saying was we've got to get below that 1220 zone, and then, now we're looking more at a further downside. And you can see in a couple of sessions after that really sharp selling, we've actually had a really strong bounce of about 4% in the last 3 days out of the emerging markets from that low earlier this week. It's back up over that important 1270 zone, but it is under the 200-day moving average. So watching this moving forward, we want to see this recapture the 1300s. The question everybody has is, what's going on in China? Is that just all conjecture? Has the market priced that in at this point in time? Are we going to resume our potential move higher? We're going to have to pay attention. But not all the emerging markets look bad. A lot of the Scandinavian countries, Denmark, Sweden, making new highs. Ireland looks very strong. Israel's market looks very good. India's market looks very good. And then, of course, there's other areas that don't. So even when we talk about the emerging markets, there are still markets in that basket of stocks that look really, really good and some that don't look really good. Our job is to sort through and figure out where the best opportunities are. When we look at it as a whole, as long as the emerging markets as a whole can kind of stay over that 1270 zone, everything looks good. Underneath of that, there's probably pressure in those other areas that I just named, because in order to bring everything down, right, we kind of need to see weakness across the board. So certainly worth keeping an eye on here, especially the policy decisions that China makes could certainly have an impact. But as you saw in our own markets, we didn't get that spillover, fear. The open on Monday and the Nasdaq saw some sharp selling there, but it was immediately brought back up. All right, so our indexes still look strong, and that's really important. When we look at our market against the emerging markets, this is one of the largest differences between the S&P 500 and the emerging markets. They're negative for the year when this was put out yesterday. The S&P 500 is up almost 17% for the year. That is a massive divergence, okay? And I want to look at what that data means. Going back into the 1980s, you can see this is the fourth biggest divergence at negative 19%. We did see a minus 23, a minus 34, and a minus 27% in 1995, 1998, and 2013. And if we look at all these prints, the S&P 500 is up more than 10%. The emerging markets are below zero through 141 trading days of the year. We can see the emerging markets really, really struggle over the next 6 months historically, okay? No positives a week later, and then only a positive a third of the time, going all the way out to 6 months. However, a year later, they tended to finally kind of catch up. Another helpful way of taking a look at this is we want to take a look at the emerging markets to S&P 500 ratio to see if the emerging markets are going to turn around or have historically turned around and started to outperform. And what we can see there, that is just not the case. A year later, even though the emerging markets were positive on the data set that we just took a look at, they're not outpacing the S&P 500. If we look at this, the ratio a year later, this is dramatic underperformance in the emerging markets versus the S&P 500. all the way out, right? So when we historically take a look at this, when we have a divergence that's this strong, there hasn't been in the past just a magic turnaround in the emerging markets, which is especially why I just talked about, if we're going to pay attention to the emerging markets, let's look for areas of strength that have been working, and let's not try to catch knives in areas that haven't been working, because again, historically, that has not bode well versus the S&P 500. As always, I hope you guys find this information useful. We're right in the midst of earnings season, so we can expect a little bit more volatility here over the near term while the market tries to price in and understand what all the companies' earnings reporting means. In the meantime, we're just going to continue to analyze our indexes, take a look at the U.S. dollar, watch those commodities like we usually do, in order to figure out where the best opportunities lie. If you guys have any questions, want to discuss anything having to do with the market, feel free to reach out at mtedeschi at Perspective Wealth Planning, or give me a call at 814-580-9881. I hope you guys have yourselves a fantastic week. As always, take care.